Hello traders, Mark Chapman here. I'm the creator of the trademark Trap Traders concept. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is the 13th of the 12th, 2016. The trap we're going to talk about today is what I call a trap break pullback. It's different to what you might understand to be a break pullback. So a break pullback looks something like this, right? As it breaks through some prior resistance, in this case it can also be support, comes back into that level and traders go long, believing that that's a good place to buy. Now, it may well be, but for me what I need is traders to be trapped and in pain, and it has to have the trapping element to that particular situation. So what I mean by that is a trap break pullback is where you have a level of support. This has been support historically off to the left, but you just can't see it. Okay, so comes back, acts as support, and comes all the way back into the level eventually, and then bounces off the level. So in here, at the hard right edge, so imagine that hadn't played out, and imagine we were able to zoom in here, there'd have been some candlestick patterns that would have been convincing enough to get somebody to believe that what had happened historically. So if we look at this as a whole, so if traders went long and bought in here, and then there were buyers in here, right, and they were able to trade to the other side of that range and take profit, they'd done well. And as price comes back into this area, this is what tempts the trader in to believe that that's going to occur again, right? So they're going to get to the other side of the range and make money as they had done historically playing these levels. However, rather than it actually playing out that way, the market comes crashing down through that level, in essence trapping those traders in those positions. Now, as we know, humans are kind of terrible with discipline, and what happens is they become very predictable, especially when money's involved. People don't like to lose. That pressure that traders feel as the price starts coming against them, and where they would not normally naturally place stop losses. So as an example, just because it's a bit of a mess there, I'll draw it down here. If someone's trading a triple bottom like that, they're going to place the stop losses somewhere below that historical level, right? Somewhere in here. Now, as price starts to go against them, this is where the trader starts to question themselves. The pressure starts to be applied. Psychologically, they're starting to get squeezed, and they wonder whether or not they are going to take this loss, or whether or not they're going to come outside of their process, i.e. the process of sticking to the trade, right? Taking the trade, managing risk, placing a stop loss. Is this the moment where they're going to cancel that stop loss? Okay, so this is essentially creating a conduit to a trader coming outside of a good process. So as price starts to go against them, there are a certain degree of traders who will cancel their stop losses. And now, if you imagine price is down here, and these traders are still in these positions, okay, not looking so happy in this scenario, right? The fact of that situation is that they are losing money, and humans being humans, they're probably over leveraged, right? Made all the mistakes in the book. They could be losing a lot of money. Someone somewhere is losing a lot of money, and cumulatively they certainly are losing a lot of money. So to imagine price action down here and to pay no mind to this historical price action is a big mistake, because you are not understanding the psychology of the charts and what and how people behave when things start to go wrong. So this type of reaction off a historical level, so I'll just highlight it in here, right? This is this here, is what I refer to as entry cheese, right? Or it could be called, I might rename it to entry crack cocaine or something like that, right? It's what a trader needs to essentially pull the trigger. If you do your analysis, just think about your own behavior to this point. If you're looking at a level of support, what is it that's going to get you into the level? And I would suggest, and forgive me if I'm wrong, but I would suggest that it's the quality of the level. So you've got to notice the level. So if a level's been touched once, twice, 3, 4 times, right? The more times it's touched, the more the merrier. The stronger the level becomes. That's what people believe. It's not true, but that's what people believe. It's that obviousness of the level. So then when price comes into the level, so as price is approaching the level, as it's coming across the range like that, what happens is you start to then think about what it is that's going to get you, right? It's what it is that's going to get you to actually pull the trigger, right? The entry cheese, the crack that's going to get you to actually take the trade where you just can't help yourself. You've just got to spend some money, right? That's the key point, because if you don't actually spend any money and come in off the sidelines, your account, right, could have millions of dollars in it, but if you don't come in off the sidelines, then that money stays safe in your account, right? Nobody can get their hands on it. But if you think about how trading in the currency market works, it's actually a transfer of accounts. So there's a person over here who takes a trade, and if they start losing, if that's a bad choice, and they start losing money, okay, that money is transferred over to the account of a trader who knew what they were doing. Okay, I would suggest that it's traders like us who hack the trading strategies of the vast majority of traders out there. So when you take a trade at a level of support, you need to understand that people like me are trading against your positions. You are too obvious in your movements. You are too obvious, and like a lamb to slaughter, you know, you're just willfully going down into the slaughterhouse, not actually realizing what's going on. Trading traps and trading hacks are essentially what they say on the tin, right? A trading trap is just like any trap. You don't see it coming, you're completely unaware, and then boom, snap, you get caught, okay? And that's essentially how we view and trade the currency markets. Now, there are probably 20 or plus trading traps that I've uncovered over the course of a decade, but this is one in particular that I wanted to talk to you about today. So, we know something about this level now. Essentially, there are some people in here who are still trapped, and yes, they're still trapped when price is down here. How do we know that? Because we know that humans make mistakes. We know they cancel stop losses. We know that they add to losing positions, right? Dollar cost averaging into a loser. We know all of those things. We know that humans don't like to take loss. We know that you don't want to take that financial loss, so you'll hold on for dear life, okay? So, with all of that being said, let me clear up this chart. When price comes back into this level, what will happen is the traders who were essentially trapped originally in here are going to look to do what any right-minded person would do if they found themselves in this position down in here, and obviously blowing a ton of money. When price starts to come across back to that level, right, they've got one thing on their mind, and that is to exit those losing positions at break even. Now then, if you were a buyer, right, if you were a buyer believing that that was a level of support historically that you're going to trade off, if you buy in here, what you must understand is that the opposite transaction must occur for you to exit that position. Whether or not it's a stop loss, whether or not it's take profit, or whether or not you hit the manual close down key. When you hit the close button, you must know that it's not actually just a close of the transaction that is occurring, it's the opposite transaction to what you originally took. So if you were a buyer in here, you must sell to exit. And what that creates over here, you guessed it, is supply. Now that there are a number of different dynamics going on here, there's not only just the people who are bailing out over here who can't believe the luck, right? Those traders, well, that's a bit of a funny face, those traders who went long in here and have gone through the emotional, psychological pain of this drop, you know, as price comes back into here, they're over the moon, right? So they're going to exit en masse, which is going to create supply over here. But you're not only going to get that, there are, as I say, other dynamics, other reasons why people are taking trades, sell trades in this area that makes this a wise move. Okay, so now we're just going to take a closer look and see if we can see any traps within the trap itself. So, what we have is what I refer to as another type of trap, and in essence it's a, sorry for the line, it's not a great one, but it's a breakout that fails. Okay, so you've got a level, spikes the high and drops like that. So we've got a trap up in here. We've also got another trap in this area here. So this looks like a pretty good place to get short. Now, fundamentally, this makes sense too, because although usually trading into the FOMC wouldn't be the most intelligent thing you could do, the Fed are massively expected to raise rates and then set a projection, a course into 2017 as to how many times they're potentially thinking about the Fed raising rates next year too. So the idea is that essentially the dollar is going to strengthen into next year, and obviously at the back of the Fed, if they do raise rates, the first major central bank to do so since the crash, only the second time in the last decade the US have raised rates, and while all your analysts and talking heads tell you that that's been priced in, utter nonsense. If they raise rates, the dollar's going to strengthen, and critically, fundamentally, Australia isn't doing so well. So from a fundamental perspective, you've got two central banks heading in pretty much opposing directions, and pretty recently these developments are occurring as well. So this looks like a decent trade. If you get a pullback, take a shot in this trade. As I said, I've uncovered probably over 20 different types of traps over the course of the last decade or more, and if you'd like to learn a little bit more about that, please click the button below to join me in my trade room. Take care, have a nice day, thanks for listening.